Outlook for this Fed. We're only a week away, not even now. Greg Staples of DWS. We're going to outlook for this Fed. We're only a week away, not even now. Greg Staples of DWS. We're going to
Tom. And that is.
Is there a parallel in that we just had? I believe the statistic is a 24% lift.
70.
Should I just the next block? Should Guy just move over one chair?
I brought you a pastry and everything, and you're still not happy.
And I think that that's a question that we should all keep asking.
So we're more than 6% off the lows of June, even though two-year yields are, 40 basis points or so, more than 40 basis points off the highs back in June. Not for me to make a market call. Michael Harnett of Bank of America is doing that for everyone. He's come out and said if you're going to make new highs on yields, he expects to make new lows in stocks. Futures are down, Tom.
And they brought John FedEx down 20%.
That's brutal.
Stunning.
Tom, corporate earnings can be frustrating sometimes because you can pick a corporate earnings, a report, maybe a new guide, a cut to guidance, and get it to say whatever you like. When it's FedEx and they talk about things like speed, this is happening really, really quickly, that's going to spook people. And I imagine it's spooking people this morning. It's certainly spooking the people that hold the stock when you're down 20% of the pre. And he said you need to look at DHL, you need to look at Royal Mail, look at what's happening with the European names as well. That story out of FedEx is spreading into Europe too. It's 390 on a 2-year. When we spoke to Oksana Aronoff earlier this week over at JP Morgan Asset Management, how big was her cash allocation in her portfolio?
70% liquidity.
70% liquidity. 390. I think the message she's basically saying is, I'll take 390 on 2s. I'm not willing to take the duration risk of 350 on 10s.
Right.
Because at the moment, given everyone's saying yes, and
whether other people are saying that too, if you actually can get yield, if you sit on.
Hey, Tom,
why are we going to buy acreage in Knightsbridge?
It's a valid point in the United States, and this breathes some life back into the conversation we've been having all morning. Matt Lazzetti at Deutsche Bank. I'm going to keep ignoring the Knightsbridge line. Matt Lazzetti at Deutsche Bank talking up 5% interest rates. We're looking at 6% mortgages, and the pushback we get against that, the continual pushback we get against that, is can we live in that world?
The issue is in the housing market.
How many more are we going to get? And that's kind of what we're grappling with, Tom. Is this the beginning of something bigger?
Right now, and this is really important.
With that very story, are they being emboldened by a lagging indicator? They're bullish to the economy, but ultimately what's inspiring them is a tight labour market and claims back to, what was it yesterday, 213?
Exactly. This idea that there still is
problem, isn't it? It's our currency, your problem. And that's maybe what the Fed is communicating right now. I think that was absolutely tremendous. I think the big conversation we're ultimately having, whether it's FedEx, whether it's the labour market, mortgages, house prices, all of the above, what price do we have to pay for this Federal Reserve to get inflation lower? And I still don't think we fully realise the price we have to pay for that. They've got these kind of optimistic, aspirational forecasts of unemployment slowly creeping higher into the high 3s and maybe breaching 4. Are we going to be talking about something close to 5%? And really, that's what Matt Lazzetti and co. are confident about buying this.
Well, we need to see the second.
Okay, great. You write about it in your research note. You say the wage price spiral is here. Math, like we don't have gravity in physics. We're getting the gravity back. Maybe we're getting the risk-free rate back. And the Sharpe ratio, does that clear out the zombie companies, the zombie bank?
I won't be. Feels like we're there right now, Tom. Feels like we're there right now.
The analysis suggests that we're not there, but we're tending there rapidly. The analysis of the optionality of institutions is narrowing fast.
Lisa?
I just can't get over.
Minister talking to some of the problems we've got in the world right now. You forget that in EM, they've done a lot of work already on the rate side before the Fed even got started.
Yeah, their rates up in the 8, 9,
5, 6 weeks. I can't even tell you what it's going to be, but it's going to be important conversations for our international audience.
I can tell you we might be there.
We might be there.
We might be there.
If we ever get home.
Coming together. Seth Carpenter
it's awfully nice here.
Might be there from Morgan Stanley too. Are you thinking about staying? Next so-called shoe to drop. Earnings warnings, those kind of things. To see FedEx down 20% and warning about a rapid change in the business environment, can you see any other data point out there? Maybe the regional Fed PMIs that back some of this up, the regional Fed indicators?
It's been messy, though.
Some of this was as well, Tom. Is that enough to spook you, that FedEx move, 20%?
Oh, yeah. I think you can link a domestic image like FedEx.
A 2 handle maybe on Chinese GDP growth? from that organisation?
I'm not qualified to make that decision other than the vectors. Lisa is.
Yeah, well,
98. There's a lot of fear out there about the X crisis that as you mentioned this earlier this week, you can get a whisper of what happened in the past, but this is new, and the new part of it to me is coming off the pandemic.
I mean, Marcus is nodding. I agree with him. We've had a 15% move on the dollar index this year.
You know, you put it really well earlier when you're...
ISIS, it was forecast after forecast about higher rates next year, the year after, and it just never happened. It never materialised.
Well, and the inflation never materialised.
Yeah.
They're looking for something close to 5. Tons of pushback. Can't live with 6% mortgage rates. Can't live with 5% Fed funds. That's the overwhelming consensus.
We had a conversation earlier this morning.